Hello traders, hello everyone, and welcome to our new video analysis. Now, before we start with this analysis, I really want to invite you here on TradingView that we will have a new webinar here on Monday at 15 Central European Time. So make sure to check this out. I will definitely walk you through a lot of different important assets that we are tracking on a daily basis. So, firstly, as you know, the jobs data in the US has been pretty strong. So market still believes that Fed will remain hawkish. However, keep in mind that this has been the case for the last few weeks, and market can already be priced in potential further rate hikes. So looking at the US yields, I still think that we can be here looking for potential limited upside around 5% on the 10-year, since I believe that we can be in the late stages of this recovery from April. At the same time, obviously, I would be looking for potential resistance still this year around 107, or maybe already around 106 to 108, I should say, in that area. Okay, so if this dollar trend would really change, then we know that this could be supportive for other assets. If we take a look on gold, keep in mind that there has been some fear going on around metals. So we have seen a pretty strong drop recently, and we've been looking for this move out of a triangle. We even shared some free posts, free ideas here on TradingView as well, and when we were tracking precisely this subways within a triangle. So we were looking for a break to the downside, because clearly that was just a consolidation within a current weakness that can be now coming into very nice supports. Why? First thing is that we are here at the 1800 area. Then you have also where wave C equals to wave A, slightly lower below that level. There you have the 61.8%. Okay, and what's probably the most important, you have this lower trendline support of this corrective channel. So I think that this is very key area for potential bounce. Not to mention that triangle occurs prior to the final move within a higher degree trend. So clearly this can be now the final leg of this free wave drop. So I'm not surprised if we are going to see a bounce in the upcoming weeks. Keep in mind that if there is a lot of fear going on, which certainly has been the case lately on metals over the last few days, then of course this can actually lead to opposite reaction. So it will be very interesting to see how metals will respond. I really like the idea that despite this strong jobs data, even after first initial spike to the downside on gold on the intraday basis, well, we are now trying to stabilize. Okay, so as I said, maybe a lot of these potential further hawkish bets from the Fed can be priced in. Also, looking at cable, I still think that this cable could have a little bit more room for more weakness here. I know that this is very strong, very sharp drop, but still can be a corrective. I really don't think that we will see these levels retest of going back to September 2022. So big support that I would watch for is at 1.18. I think that there can be a next downward target, and that's where I would be looking for a new reversal. Also, looking at the 4-hour time frame, if we think that we are going to see just temporary rallies here, then watch out for this resistance at 22.70. Okay, so that was the former wave for also the channel resistance line of this base channel actually. So that's the key resistance area. If this one is broken and we even start ripping higher towards 124, then I think that even this one can be bottoming. But for now, that's still a downtrend and has been even accelerating recently because Bank of England, as you know, did not hike the rates in September. If we take a look on crude oil, well, a lot of bulls were going on here into extreme here. At the end of September, there were plenty of hawkish bets because, as you know, higher crude oil leads to higher inflation. But what's interesting now is that we are seeing a very aggressive reversal to the downside here on crude oil. So I'm wondering if now these inflation bets or hawkish bets, I should say, could maybe slow down a little bit. Because after all, we are seeing a very strong and very significant reversal. So maybe at some point, even US dollar index could potentially find sellers and come to the downside if we think that maybe lower crude oil could bring inflation to the downside as well. So looking at the crude oil, I think that this drop has room for further weakness here because it's impulsive. So first leg of a free wave drop, watch out for more weakness after any near-term correction. We are now at some support here at around 83. The resistance definitely is around 87 to $88 per barrel. Big support on the downside is around $77. So I certainly think that this could be retested at some point. And also finally, let's take a look on cryptocurrencies. They didn't move much, but what I like about cryptocurrencies in general is that we have seen a very strong support that is still in place despite lower stocks that we have seen over the last few weeks. So if stocks will stabilize and attract new buyers, then I think that even cryptocurrencies can see some brighter days here. But in the short term, just keep in mind that Ethereum could potentially still retest this lows from September around 1,500. It's still very important key level, but notice that this rise from the most recent low has been in three waves. That's why I'm saying that maybe we could see a little bit more consolidation here before finally we will stabilize. So once again, thank you for watching this video and make sure to be with us in our webinar on Monday. Good luck.